Aman Raina. I'm an investment coach at Sage Investors. Welcome to another edition of Stock Talk, where we talk all things stocks. I thought today kind of build a little bit upon my previous session where we talked about contrarian investing and working about trying to identify stocks that are kind of out of favor and out of not doing very well. I thought it'd be a good time to talk about a sector that's kind of really out of favor right now, which is oil and energy and gas, the whole oil and energy gas sector. As you know, oil prices have just literally tanked in the last year and a half, going from as high as $120 to now as low as $30, and some analysts out there are calling it to go even lower. So, from that perspective, given the negative sentiment on the sector, is it a good time from a contrarian perspective, to jump in and back up the truck and buy a whole bunch of oil companies? Well, as we talked about in a previous posting, you still got to do due diligence. You just don't back the truck up and buy every oil stock you can find. You got to understand and identify out of that sector what companies are really truly the high quality companies, and see where their valuations are, and then make your investment accordingly, and then be prepared to hold it, because a lot of times it'll take a while for the sector to come back. So due diligence is really critical at this point. And I just want in this session here, I just wanted to share kind of my past experience with oil stocks. Back in the day, in the late 1990s, when I started investing and analyzing companies, I found in my analysis at that time, if you flash back during that period, oil prices at that time were between $10 and $15 a barrel. It was a pretty depressed time. But I found in my analysis, when you look at these companies in terms of wealth creation at the time, these companies were still managing to create strong economic profit. In other words, they were still generating strong, high returns on capital that were greater than their cost of capital. And so they were creating tangible wealth despite a really depressed market. And that really appealed to me, because eventually I thought, okay, eventually oil prices are going to come back, and when they come back, these type of companies are going to be well positioned, and their stocks are going to be well positioned for a big ramp up. And sure enough, that's what happened. And at the time, it was interesting, because at the time everybody was wanting to buy tech stocks like the .com companies and everything. And every time I mentioned something about a Precision Drilling or an Alberta energy company or a Pan-Canadian Petroleum, I would get people like, what the hell? Are you crazy? You should be buying pets.com. And so, but I didn't go that way, because those companies didn't make any money, and oil and gas companies were making money. So I did my due diligence, and it worked out pretty well. And so you've got to factor that in now, in terms of do the same kind of due diligence now with these kind of companies. But my take on it is, I think oil and gas companies are some of the best well-run and well-managed companies on the planet. They do an excellent job of managing their scarce capital and can generate tangible wealth. They can do it in a good market, and they can do it in a bad market. And so now that I see oil prices down, this is a really great time to kind of take out your spreadsheets and crunch some numbers and see which one of these companies, some of these companies out there, like your Exxons and your Suncors and your Canadian Natural Resources and your Chevrons out there, are really truly creating value. And it's going to be interesting now, because the companies are going to start reporting their 2015 financials, and because the market was so down depressing, there's going to be a pretty big drop off in revenues and probably profits. So the key thing now is when those reports come out, is to really start getting into those into their reports, to see, even in the depressed market, the way the market was last year, are these companies still managing their capital effectively, that they can still create profit, a significant profit, or a reasonable amount of profit. Because if they can do this in a depressed market, and their stock is depressed, then if you buy them now or at current levels, then eventually the market's going to come back. Like, we're not talking about a GoPro here or a Twitter here. Oil is a core commodity in our standard of living, and so even though oil prices are down now, eventually they will come back up. The question is when, and anytime you can flick on CNBC and you can get an analyst who will tell you when it's going to come on. Chances are they have no idea, because nobody has any idea where oil prices are going to go. It's a fool's game to try to figure out, but you just have to look at it from it, take a step back and understand that at some point they will come back. It might take 5 years for it to happen, or it could take 5 months. The reality is, and it comes back to this whole concept when you're taking a contrarian investment decision, is just you have to have that patience and willing to ride out the volatility that will come with it, with a depressed stock and analyzing a company in a depressed sector. So so the question is, from my perspective, is I think these oil prices will eventually come back up. It's a product of currency issues. The U.S. dollar is extremely strong, and that's had a big impact on oil prices. There's just a ton of oil out there, and at some point that excess supply is going to get whittled down because of economic growth here around the world, and that's going to get whittled down. So just the pendulum ultimately is going to swing the other way. And so the time really, when you're looking at a contrarian investment decision, is to do that due diligence. And that's really the message for that I'm trying to get out for you for today. As a disclosure, I always like to be transparent with my personal. It's one thing for me to say a bunch of stuff, but it's another thing to put your money where your mouth is. I do have a small position in Imperial Oil. I've been buying that stock as oil prices have been tanking down, tracking down. I have been building a little bit of a position in there, and because in my due diligence, it's come out as a solid wealth creating company. And so the question is, can it continue to be a solid wealth creating company in a depressed market? And that's something I'm going to watch pretty closely, especially with the 2015 financial statements coming out pretty soon. So that's all my take. That's all I want to talk about. A little bit about oil stocks today. If you have any questions, you want me to talk about something specific out there, if you have any questions, feel free to shout out. Send me an email through my website. My website is we're at sageinvestors.ca. You can follow me on Twitter. I'm on my hashtag or handle is @sageinvestors. And if you want to follow any of my other observations, investment decisions that I'm facing and trying to work my way through, feel free to follow me through there, and I welcome any feedback, any questions you might have about this and anything else, including my investment coaching services. That's it. My name is Aman Raina, and it's been another edition of Stock Talk, and we'll catch you again.